What is your biggest challenge around going down that strategy of investing in a startup?
There are challenges that are related, very specific to us, and what I mean by that as the fund itself, but also the team. Because we chose to focus in Cyprus, Eastern Mediterranean, Eastern Europe, you have to look at many companies before you can find when you restrict your market, your footprint. So that's one technicality, but it is true. The other thing is you have to have a balance of how much work you and based on the resources that you have, how much work can you give or dedicate to 10 companies? Because you can't do everything for everyone in 10 companies. So it's got to be a balance of need. And we don't impose ourselves to our partner companies, that's what we call them. We work together and see what hole we may plug for a while. Those that fail and they come back, those you have to look for, because then you filter. As an entrepreneur or someone that invests, you need filters. And not all the filters in deciding are on a piece of paper. They're not all on a pitch deck. It's not about the market is 10 billion. Who cares? At this point of time, if the market is 10 billion or 12 billion, it's a little too early, but thank you for presenting it. Now,
how are you going
to get there, right? So those that fail and come back, you got to pay attention to. Now, why you fail, and if you're failing for the same reason 2 or 3 times, then we've got a different problem.
Correct.
Challenge, I should say.
100%.
Right.
Yes.
But if you fail because maybe you were just too far ahead in thinking, what are great things? I did a couple of those.
Yeah. Welcome to the Financial Frontiers podcast. Remember to subscribe to our YouTube channel, hit that bell icon to get notified when we upload new content. Follow us on Spotify and give us a 5-star rating. It will help the channel, which I hope you love so much. Here we are. This is another Financial Frontiers podcast with a guest today. My guest today is Andreas Panayi, co-founder of Kinisis Ventures, which is a fund. Started as an accelerator and out to show the world what Cyprus is about and how the potential of the individuals here in Cyprus can really create some successful stories, not only within Cyprus, but globally. Andreas, please introduce yourself. Thank you for your time. And I'm looking forward to a good conversation here on how the fund management world works, investment, angel investors, or whatever you want to call it. Let's get into these discussions.
Wonderful. Well, thanks for having me. I think we're going to have some fun today. Get into some of the very interesting subject of investing technology in Cyprus. Where most people say, why did you even think of coming back to do this in Cyprus? So I think there's a lot of very good stories that we can get into. So I've been in the States now for, 40-something years. Was at the right place, the right time after school, college, MBA, whatever that was. Nothing to do with what I'm doing now, but...
So what did you study?
What I studied was hotel, restaurant, travel, and tourism. I have a bachelor's degree in that.
Right.
It wasn't for me, obviously, and ended up with an MBA because I couldn't go get a job at a hotel. It was just I couldn't do it. I tried it, and it just for a summer internship, and that lasted very, very short, very short time.
Right.
So I got an MBA in marketing. And I ended up working for an advertising agency, my first job, $19,000 a year. Yeah, I thought it was a big shot.
And what year was that? So around...
87, 89 maybe, I think. Yeah, because I started 82. 4 years of undergrad, 2 years of MBA, around that area of 89.
Yeah, so you were a big shot then.
I was a big shot, wasn't I? So I got a job. My first real job was with a company that did communications for business to business companies only in New York. In New York and New Jersey, but New York office mostly I was spending time in. I had a very visionary CEO, Fergus O'Daly, in good memory. And I was really good with wires. Like I was the video kid, whenever they had a video presentation and the thing wasn't working, they would call me and I would connect it video. And we had this presentation, laminate presentation, so I was really good at that. Mm-hmm. So let's go now to early 90s, late 80s, early 90s. This visionary team led by Fergus O'Daly in the B2B technology, B2B communications company in New York, they acquired a company in Palo Alto that was doing this very neat new thing called email.
And this was not early 90s, right?
It was early 90s, very early 90s. And because they were a database marketing company, so they had telemarketers and database, and they would do direct sales. So email was becoming part of that, part of marketing sales. And they were also getting involved in this thing called the super highway. I think that was the multi-something highway, we used to call it, the internet.
Yes.
So, and one of their clients was Netscape in the Palo Alto area, and a few other semiconductor companies. Those were the customers of this company. So they made me the internet guy.
Wow.
All right. So right place, right time. Yeah. A visionary CEO that we used to sit at lunch and say, one day you're going to just be clicking on things. Click, 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 click. That's how he used to do that with his hands. This is now early 90s, this guy.
Okay, so...
And we're going to be clicking on things and things are going to happen. So we're like, okay. So anyway, fast forward, the group, the internet group became really big quickly to the point that it became bigger than the agency itself.
Wow.
Right. So the New York office had lots of people, the West Coast office, lots of people. We then started, I was responsible for buying companies back then, groups overseas. So we can create one of the first digital or interactive global networks. That was the company, was Poppy.com. We used to call it Poppy.com. And that's what we did. Spent about 2 years flying all over the place, London, Sao Paulo, Hong Kong, Europe, London, in other parts of Europe. And we were buying these small little groups of tech guys.
Right.
That knew how to do HTML.
For what goal? What is the
create an international network, a global network of folks that can migrate companies into the digital world.
Web.
So whatever we're calling now the digital migration, whatever back then was.
It was the very first digitalization move of the world, I guess.
We were one of the first agencies that did all that. Well, think about it. Who do you think were the first acceleration companies ever? They were ad agencies, because companies used to come with ideas and had no money, and they needed people to do the marketing.
That makes sense.
So they would come and say, okay, we'll give you shares and do the marketing because we don't have money.
Right.
So it evolved into, those kinds of things. So we were a marketing agency, and what do you do when you first build a company? You need to market yourself.
Right.
So I'm not saying that was it, but we were a big part of that genre of, getting shares to do
Well, I guess being in that position, if you're an agency, a marketing agency, you're getting, you're tapping into insight that the rest of the world doesn't yet have.
Yes, exactly.
Because you can see what the market is asking for.
Exactly. And our clients, we were charged with moving customers to the digital world. So the international network that we were building back then for this company, Poppy Tyson back then, Poppy.com, which was a big part of another, one of the big, it was probably, I think it was Bozell Jacob back then, one of those big agencies, that they needed their customers and their resources to be moved to the new way of doing things. Back then, there were people who were telling us, this is going to go away.
Yeah.
And there are others that say, oh my God, I'm going to lose my job. Very similar to what we see now with AI.
Right.
Just now AI is faster, bigger, and will have a much bigger impact because of the adoption. But back then, we were moving from a completely analog world into this new thing. And you can imagine now, we were there when the first graphical interface of the web was introduced by Netscape, I think 1992, 93.
Yeah. Netscape. And Netscape was a documentary, which I'm trying to remember, between Netscape and was it Microsoft or Google, where they had these challenges, and Netscape did something which really pissed off the competitor. I think it was Google, and then Google just crushed like that. Well, I can't remember the story exactly how it went.
I'm not familiar with the story exactly myself, but Netscape was one of the first, at least we were, because they were client of that they just made the move to create a face for this technology.
Right.
And Mozilla, if you remember, was their first, I think it was the name of the first interface,
Mozilla.
Yeah.
And which then branched off to create Firefox.
Yeah. So that dates me, but it's okay, But, so in their right time, right space, right people that had a vision, right? So learned a lot.
In the right area. So, in the US. In the US.
Yes, in the US. And so we saw and because I was sitting in the communications company, you see both sides. You see the client side evolution, but then you see the operational evolution of companies like, IT-related communications firms. So you see the world.
So like the Nortel networks of the world.
All those guys.
Telephony, fax and telephony, which shifted from that kind of communication method.
Absolutely. IBM was one of our clients. Right? IBM was one of our clients. One of the competitors that was coming up was AT&T. Right? So we had those first movers as clients. And by the way, clients, we just build HTML websites.
Yeah.
Right? So it was exactly what Ferguson Daly said. Click, 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 click. Yeah. So you clicked and moved. So back then, HTML websites. Wow. Yeah. HTML websites. So, but that's, that's the beginning of many things that we saw. So through the years, this company eventually was acquired. Then I moved to another similar company and took over president and CEO of their digital infrastructure. Another one of the big marketing, advertising, Madison Avenue firms, and did a lot of the global work. We tied it together, and they sold that one as well. I was too young to know about shares and ownership. I was just getting paid really well, and
you were happy
driving, flying all over the world and being very happy. Just having one of the first phones on the train,
Right.
I had one of those big
Motorola
phones that were as big as, like a briefcase.
Those. So before the Motorola, the 5200, 7200.
No, my friend, I had the full board, the full thing that used to be a car phone.
Like a briefcase. Right.
And I was riding the train in New York and I was showing off. I wasn't calling anybody. I was just holding it. But it was very cool. The antenna was coming right out of the briefcase.
Right.
But those are the times. You learn a lot.
Sure.
And you learn it in a very compressed time.
Mm.
But you're learning on the client side back then, and you're learning on the operational side of companies. So we learned a lot. So they sold, that company was all sold as well. So I took a little break. I went and worked for a company. Back then, I guess it was a VC, boutique VC in New York. And I saw that side of things. But back then, people walked in with an idea on a piece of paper and they were just getting funded.
Yeah. It was a whole different world.
Yeah, it was the dot-com up.
The bubble.
It was before it was the building of the bubble.
Right.
So I was
97, 98, something.
Exactly. 97 is when I left the last agency. And I was like 98, 99. I spent some time with the VC, everything was just being funded. Because there was a fear of missing out.
Right.
So,
which is, and I think you're going to give us a lot of insight around what it takes to run a venture capital, a fund, or rather a private investment firm, where there's different strategies. The fear of missing out is one thing, where you just you take this shotgun approach. We'll just snatch everything up, and whatever sticks, the one that sticks will pay off all the other bad decisions.
Yeah, well, there's all kinds of models, and I'm not gonna. I would never call myself an expert, because the way I do things is just who I am. I just dive in, and I may use things that are part of whatever structure exists or existed, but made some stuff up just so it can be different and operate the way I believe, or we believe, our team believes. So we can come back to that. But after leaving the VC space, which wasn't for me back then, I just realized that it's not what I want to do. I was a CMO for the companies that they were investing in, but I sat in and I looked at how they looked at companies, and I realized it wasn't just for me. It was a little too structured back then for me. Ended up in a joint venture with a European company, actually, that were rebuilding another technology company the way I would know it. And then 9/11 kind of paused everything. Our office was very close to the point that there was fenced in, fenced off, I guess. We couldn't get into the office.
Were you around the area?
I was at a client's.
And you heard? Did you?
I was at a client's, and I was sitting in a client's in a meeting. Actually, it was New Jersey, and we were interrupted, and there was a TV, and they put the TV on, and I was like, "Okay, that's where the office is." We were on Chambers Street, so it wasn't too far away. So it was closed. We couldn't access, obviously, for months our stuff, our computers, and I think that was kind of the beginning or the end. And then the beginning of a totally different thing, which was my entrepreneurial thing, which, by the way, the first day I got a real job, the next day I created business cards because I wanted to be on my own and didn't use them for 15 years, 15 or so, 20 years later, but it was meant to be.
You know what? Sometimes when I think what people need is a visual, almost like a stamp.
Yeah.
It is just a verification that this is the new me.
Yeah.
I love that story that Jim Carrey shared. Jim Carrey, the comedian, who says, before I made it, I was living out of my car, and I wrote a check to myself for $10 million. I love that story. Yeah. So it's something tangible there. I can see it.
You can see it.
And then the world takes you down the right
path.
That's
right. Yeah, I had a business card. Card.
That's all you needed.
So it was printed and ready to go.
Yeah.
Totally different name, but ready to go. So after that, which then we're talking very close to the internet bust, build up my own company. I had an idea of creating of solving the problems that the other companies couldn't.
And what was that company doing?
It was Kinisis Marketing, of course. Good karma in that name. It was a digital migration consultancy, basically helping build others for big companies. I realized what can be done really well and what can be done very poorly when you're big. So we created a very, very boutique company at the right time. So we did everything a big company would do, but we did it with a lot less money and much faster.
Much.
We had no offices back then. This is now early 2000. The no office concept, we did it because we didn't have money. But we pretended that was part of our gig. So we would have offices in our clients' offices. But what a perfect way to get business.
Perfect.
It was constant relationship.
Exactly. You keep that existing customer almost secure. They're not going anywhere. The face-to-face. You're there every day.
We built an amazing business. Myself with the 2 or 3 other partners that we brought together. Amazing business. We had a lot of fun. Mm-hmm. We grew the business quickly, and then we ended up getting offices. And there was the front end of the company that we would do a lot of consulting in this migration, this explosion of now what do we do with everything becoming truly operational, digital, not only on the back end and marketing, but operations. But we also had the development. We would actually develop some of these applications. So we merged up with another company that have offices and capabilities in the US and also in India. They were our folks and grew the company, and we sold the company.
Also, you sold Kinisis Marketing?
Yes, that was yes. So when I learned from the others, you cut your teeth, you make some mistakes, you make some good things and bad things. We celebrate failure in the United States. We're here, we look down on it. So we can discuss that. We need to put a pin on that because it's a very important thing.
Say that again.
We celebrate failure.
Yes, it's
in entrepreneurial.
Yeah.
We look
down on it. 100%, and I love that conversation because we really need to flip the level, the status quo. Yeah. Because why is Israel so successful? They fund failure. You don't get penalized. Somebody in startup world, right? Mm-hmm. When you're going to start a startup, the chances of success are quite slim.
Yeah,
they're very slim. But if you're an entrepreneur who wants to, make it, you got an idea and you start out, you're going to learn lessons. Mm-hmm. You failed. If that failure is going to cost you to not be able to try again the next time, it's such a shame to have lost and not gained on the lessons that you learned, right? And I mean, I can say that I've failed quite a few times,
yes.
Right? And I wear them as a badge of honor. I love them. Yeah. I love those things. I'll talk about them all day long because
it's a whole conversation that we should absolutely have, and people should really hear on this island, in some other places. But failure is not celebrated in entrepreneurialism. I'm talking about business. We need to rethink that.
Because what are you scared of? Are you scared of being judged? I think you should. We should be. Celebrating people who actually try.
Yeah.
Good for trying. Good for you. Do it again.
Yes, and you know what? Those that fail and they come back, mm-hmm. those you have to look for.
Yes,
because then you filter. As an entrepreneur or someone that invests, you need filters. And not all the filters in deciding are on a piece of paper.
Sure.
They're not all on a pitch deck. It's not about the market is 10 billion. Who cares?
Right.
At this point of time, if the market is 10 billion or 12 billion.
Yes.
It's a little too early, but thank you for presenting it. Mm. Now,
how are you going to execute?
How are you going to get there? Right. So those that fail and come back, you got to pay attention to. Now, why you fail, and if you're failing for the same reason 2 or 3 times, then we've got a different problem.
Correct.
Challenge, I should say.
100%.
Right.
Yes.
But if you fail because maybe you were just too far ahead in thinking, what a great thing. I did a couple of those. With my partners, we just sat there and we just said, "Oh my God, they're gonna love this. Let's create this." And then you create it like,
too soon into the market.
Nobody's buying it.
100%.
Great idea.
Yeah.
But okay, I'm okay with failing when it comes to that because it was a try.
I'm sure there are many, many examples of already failed startups who have tried to get into the augmented reality space.
Yeah.
So like virtualization, like that.
We invested in one of those.
Right.
Now.
It's a little too early because if the infrastructure becomes more mainstream, like more wearables, something that's more, a lot of unicorns are going to be created from that, in my opinion. You're walking down the street and then, we're talking about marketing. If you're walking down the street and there's a sale happening, at that specific shop, instead of having banners, you get augmented reality where it pops up. For example, right?
Those are things that are happening already.
Yeah.
It's the time is right for that, and we can get into that afterwards. But again, I'm not a tech visionary to tell people what to be buying or not. But I can tell you that our experience, which we bake into who we are as Kinisis Ventures, is that we've seen some of this stuff evolve with our experiences in markets that move faster.
Right.
And we can not predict, but we can have a sense of, this is going to be one of those things that could catch on.
Right.
Not because it's a fad or some sort of a trend, but because it has a it's commercially viable,
100%. And just back to the filtering topic where I'm putting myself in your shoes and I can understand why you would look out for the individuals who have already failed. It makes a lot of sense because they've already learned the lessons that you as an investor, if somebody comes with a great idea but doesn't have failures in their history, in their portfolio, you could be the one paying for their initial failures.
That's a very good point. As an investor, it's not necessarily we're seeking for failures, but we don't look down and we don't penalize a failure.
Right.
I think that's that's an even better way of looking at it. Where somebody may think that, oh my God, I failed, so I shouldn't really talk about it. Actually, we like to hear why and what and who. So we don't seek for, but we don't believe that it's a negative. The same thing that is a positive when you exit.
Right.
Which is phenomenal, great, because it gives you a lot of credibility. But I think, being someone that tried and didn't work out, and why it didn't work out, and you can talk about and then you can talk about why you will try again not to. Those are very, very, very good parts of, what somebody could bring to the table and why an investor may or may not decide to invest in. But culturally here, I think we look down failure, and that's an awful thing to do.
Yeah.
Even though in some ways we contribute in that failure, the way we are structured as an ecosystem, because we have a way of keeping bad ideas on life support by giving them grants and grants and grants. And 5 grants for winning this, and 10 grand. And what do? You just keep really bad ideas alive. Let him fail. And if he comes up again, she come up again, then I want to look at him.
Right.
That's one thing. Also, don't think that whatever you're building is going to be it. It's going to pivot 5 times.
100%.
Just before you, get to the next round. So this failure thing as a culture, we need to stop with. At least in this ecosystem that we're involved in, the entrepreneurial ecosystem.
Agreed. And so, as an investor, obviously, we're talking about an individual. You're not going to judge someone for the failures that they've had or the successes. You're going to take it all kind of not in a pinch of salt, but it's all useful information. That is one aspect, but generally speaking, what would you say is the most challenging part of being a boutique investment, investor, and cherry picking? Because as I understand, Kinisis Ventures isn't taking that shotgun approach that we spoke about before, where you just, you have a massive cash pool and you don't just throw the money, but I mean, you keep trying, and that one unicorn's going to pay off all the rest. Yeah. This is a different approach. So what is your biggest challenge around going down that strategy of investing in a startup?
So there are challenges that are related, very specific to us, and what I mean by that as the fund itself, but also the team, because we chose to focus in Cyprus, Eastern Mediterranean, Eastern Europe. We spread a little bit towards the Eastern Mediterranean, Eastern Europe with our second compartment. The first one was strictly Cyprus. The challenge is, especially if you're a boutique, you need to find in a relatively small market, some really good companies that you can focus on and take them to bigger markets like the ones that we're looking for. So it's not a volume business, it's a value business, right? So you have to shop, you have to look at many, many, many companies before you can find when you restrict your market, your footprint. So that's one technicality, but it is true. The other thing is you have to have a balance of how much work you and based on the resources that you have, how much work can you give or dedicate to 10 companies? Because you can't do everything for everyone in 10 companies. So there's got to be a balance of need. And we don't impose ourselves to our partner companies, because that's what we call them. We work together and see what hole we may plug for a while until they move on. For example, in one of our companies, 3Dium, my business partner, Chris Richotis, was the interim CFO.
Okay.
Up until, the pre-Series A. And at the right time, he just moved on to the next thing, wherever else is needed. I did some marketing work for some of our other companies, whether it was MBO, whether it's ProMed, so you plug in where you need it. So we keep a very nice balance of need. You can't have all 10, let's say, need the same kind of resource all the time. Now, it's not just the four of us. We've got a network of very, very smart, good folks that we can tap in, but they're not the same as the 4 or 5 of us that are very dedicated. So a challenge is finding the balance within those companies. So you need it here, and then nobody needs you anymore, and then you go to the next. So it's that balance, but it's a partnership. It's a decision that you make with your partners and the companies.
Right. And I think, you can't really know what to expect in terms of what the demands or the guidance is going to be required from every new startup or venture that you
have an idea. That's it.
I guess, the more you invest in, the more experience you gain.
You get, yes. I'm not going to say that it is, God, we're smarter than anybody else. But once you've done this for a while, and not only the investing, but working with clients for some 30% plus years that are basically the same thing in some aspects. When you meet with a company, you kind of have a feeling, all right, so this team and this product or service they've created that we're going to do is going to have to pivot 2 or 3 times. They're going to need this type of resource. And then we're either spot on or we're close enough or far off. So far, we've been pretty good in guessing with our teams what kind of assistance will they need. And that's part of the criteria for selecting us to get in. It's not just the idea, and of course the team and all that wonderful stuff.
Mm.
How can we help?
Right. And change the trajectory of the probability of success.
Yes.
Because and just a question, Yana. I'm imagining that if you've been successful in one specific vertical, the chances of success for a second startup in the exact same vertical obviously increases.
Mm-hmm.
So you have almost like a blueprint to follow with some tweaks and adjustments that were required in the first, and also, in technology, which is your main sector that you invest in, tech startups, things change.
Yeah.
And do you have that kind of strategy where you've seen success in one of the initial startups that you had? When there was an exit, and then the next one that comes in that kind of matches or can compare, you onboard that a lot quicker, I would imagine.
I think it comes natural. It's not even planned and/or can't say that we're that smart or we thought it would be that way. We naturally go to areas that we know well,
right,
and areas that we know our network will work for them at the right time.
Right.
Because again, we're focusing on companies not on volume, but in value, which means value is measured in what can we do outside of the capital. Capital for us is like, it's the okay, of course you're going to give money, but the real value comes after that.
Your value add.
The value add. So your value add will be in places that you know what to do, how you're going to do it, and who you're going to call at the right time. So we go to exactly what you said, but it's not a plan. Right. It just falls in place.
Naturally happens.
It's a natural, you naturally will go to where you value will be at the max.
And markets that you understand.
In markets you understand, in networks you understand.
Got it.
One of the things that we try to do is, before we make a final decision, which is a unanimous decision for us to invest, we kind of either discuss or have an idea who we're going to call Monday morning. Because if we're struggling with that, we're going to be struggling with it when it's time to really help these companies, So, again, is it the perfect world that all comes perfect together? No, sometimes we really like something and we immediately start thinking about the network we need to create for them, But, you go in with a vision and a strategy, and we're very good at maintaining focus in our strategy and in our execution. And sometimes, you do need to color outside of the lines, but you kind of know what color you're going to use.
Got it. So could you run us through what it looks like? What does the journey of a startup looks like? So from the beginning, from idea to initial steps, what kind of funding can a startup expect to get from Kinisis Ventures? And then what does the shareholding look like? How does do you get them into a pre-seed? What does that look like? And where's the exit? Can you run us through what that journey is like?
Yeah, and obviously I'm going to say VC. We'll kind of categorize ourselves as VC, even though I do think we're business people with capital access. But we are, in essence, VC. Everyone has a different way of looking at this thing. That's the beauty of it, in my mind, and it's shifting and changes. So I can only speak for how we view as Kinisis Ventures. How we view Kinisis Ventures Fund, which is a separate entity. And I'll speak mostly for the second compartment, but I will reference the first compartment because we've learned many things as we go as well. So the thesis, the idea was to invest in pre-seed, seed. And I'm going to use these terms, but very cautiously, because when you say that in the US, a seed is $1 million, so it could be $1 million or so. Here, a seed could be 300, 400,000. So, and I'm throwing numbers at it, but there's a huge difference when we start using these terms. So that's another thing we have to be very cautious with. But let's call it, when we find companies here in Cyprus, early on, it's pre-seed, seed. Pre-seed needs a lot more work.
So pre-seed means it's just an idea, nothing exists on.
If something exists, always for us, we don't do
From
just on a
scratch.
piece of paper. Too much work.
Right.
I'll leave that up to the venture studios or in my mind, friends and family, angels,
Right.
some strategic.
Yeah.
So that's a little too early.
So you get in on the stage where there's at least an MVP, a minimum viable product.
At least in most cases, at least, and that's what we want anyway. But also now with our the second compartment of the fund, I think we're going to be focusing a little more on the just pre-commercialization. I would call it. So you want to call it seed or commercialization. We kind of like that spot. For many reasons, because I think our true value help starts there.
Mm-hmm.
That doesn't mean that they're going to stay exactly what they think they are. We're going to probably pivot together, but that's the stage. So the tickets that the fund usually goes with is between 350 to 4. So not only us, I think that's generally here in
Cyprus.
In Cyprus, as far as the city is concerned, I believe. And then, you can go a little more, obviously, depending on the size of your fund and how many companies you want to invest in. And then, of course, we always know we're going to follow on. Okay. So you may start with that, but when you should always have, thinking or strategy, that you can't, it's not just run and go. You need to maintain the position. You need to make sure that you keep moving along with the company. And that's in general terms, how it should be looked at. And then, we as a fund, I can speak for, or as a group, pre-Series A, again, depending on sizes, is kind of where we play. Don't forget, the fund doesn't always have to lead to be the first investor. The fund can co-invest. So the ticket size changes.
Right.
The timing changes. So as far as the journey is concerned, that's kind of how we see the world. Pre-commercialization, move along to kind of establishing a lot more about who and what this company does. Closer to some growth rounds that we may or may not be, in there. The fund may not be in there. And then just follow to the point that we feel the fund needs to maintain the position. And then, take it to the wider network.
So is that an overall, are these ticket sizes generally the same depending on the market? So you mentioned a seed generally in Cyprus is around 350, 400.
That's how we see it.
That's how you see it.
Anywhere between up to 5, maybe.
Up to 5.5 And then in the US, you mentioned a seed is $1 million.
It could be. I mean, there's angel groups that they can get together and raise $1 million at the angel level.
Right. Oh, okay. So there's no universal, let's call it a number that kind of qualifies each of these different stages.
I am sure if you search the web, there will be.
Okay.
I just don't know that you can use it as a rule of thumb for everything and everywhere. From what I saw, again, I wasn't born in the financial services. I wasn't born in private equity personally and venture capital. We became one.
Right. Through your own experience.
Through my own experience.
And doing it in your own way.
In my own way, in our own way, I should say, as private investors first, as acceleration. So
right.
Whether we follow the rule of thumb or not, I don't know. I just know what we believe works.
Got it.
In what we do, in the markets that we do it, in the kind of companies that we do. So I'm not going to claim that I know all this,
right.
The different tables or acronyms.
So even though you went about it your own way, you are in this space. And I think you can compare, Kinisis Ventures can compare itself to, obviously a smaller scale, but can compare itself to the Y Combinators of the world.
From a side. Yes, in the fact that we want to be
so big,
helping entrepreneurs succeed. Yes, in the fact that we invest in technology and vision. But why come? We're talking about one of the largest, biggest players that bet on some of the best and biggest minds, brains, teams. So I don't ever want to say that, but in concept, that's what we do.
Right.
We apply who we were, what we learned, how we believe should be done, and we invest in entrepreneurs for the benefit of our investors and for the benefit of the entrepreneur.
Right.
From that perspective, yes, we're a venture capital firm, which was born in the United States in the very, very early 50s or 60s, which was technology companies investing in R&D. That is not going to change.
Right.
How you do it,
I
believe, is already changing.
Yeah, and it does make sense that there cannot be a one size fits all in terms of the size of the funds, in terms of the approach and the strategy and the contribution. The Cyprus market is for sure very different to how it is in the US, and I think it is a great thing that Kinisis Ventures is looking to help entrepreneurs in Cyprus get to that point and expand outside of just Cyprus.
Yes. Again, now we're going to the romantic reasons why we came back to Cyprus. Now, again, as a fund, the responsibility of Kinisis Ventures fund itself, is to deliver value to the investors and to the enterprises, the entrepreneurs, and that is the focus of any investor. That should be, and it is for us very much so. But at the same time, coming back and helping and being part of the ecosystem is also very important. And I think there are correlations. When you do one well, the other one is even better than what you would expect. Cyprus has a lot of phenomenal talent, very smart people. Great ideas can come from anywhere. We see it, we feel it. We put some man-made obstacles for ourselves, and probably a whole podcast by itself. But the whole notion of helping success or create success stories, it what becomes the foundation for the next VC, for the next angel investor, for the next private investor, because those are the folks that we're missing here. We can have money. There's plenty of money, and some are free money. The grants that exist, and again, that's a whole podcast by itself, because it gets to a point that it's actually destructive. It should be, used properly, and some people abuse them, as far as I'm concerned.
Happy to discuss it a little bit here.
I would love to. We'll come back to that. The bottom line is that, we need people that have done it, because I don't care how smart you are. And again, God love those that went to these Ivy League schools, which I couldn't even go to, park in the same parking as some of them parking spots. But I've learned my way in the New York streets of so
let me tell you, interrupt you, I'm sorry, better than any university.
You
just
gotta get your face punched a couple of times. But the point being, you need both.
Yes.
And we have plenty of smart people.
Right.
We need more people that actually, you're an entrepreneur. We're going there, but clean your own toilets because you got a customer coming and you don't have enough money to buy a crew cleaners, or you don't sleep at night because the cash flow did not hit where you wanted to because the customer didn't pay you yet.
Yes.
So unless you get to that point of hiring, firing, changing, shifting, closing, opening, you're never going to be able to talk to somebody and be a true advisor. If you don't sit at the table with someone that wants to buy your company and you're negotiating, you just don't know.
Right.
All right. You don't know when you decided to exit, if it's the right time or not, because it's not written in a textbook.
Mm-hmm.
Unless you go through all that, you cannot be a true mentor. And I don't care what we say. You need both.
Right.
You need the book smarts, but you need people that actually were in the trenches. We got lots of book smarts. We got lots of advisors here, a lot of mentors. Actually, too many. We have too much excellence in this island. We're going to sink it one of these days. We need people that did it.
Yes.
And when we help some of these guys do it, we're hoping that they'll come back and help others to do it or become investors, become family offices, become VCs. That's what we need.
Yes.
And that's our contribution, is helping do that.
Right. And I think the path to getting there is empowering these individuals to get into the trenches.
Yes.
Don't be scared.
Yeah.
Because, you got to have both. I agree. I didn't have the one. I was just in the trenches.
It's cool. So was I. I never raised money for my first company.
Yeah.
We did it organically.
Perfect.
And here I am investing. But
there you go.
It's okay. It's all good.
Yeah. Me too. So, and the chip on the shoulder is something that I think is an important catalyst for anyone who's executing, who's in the trenches and trying to make it happen. Because if you just get given money,
yes,
and you're
comfortable,
you got to treat that money like it's your own.
Yeah. I'd say that's a very good point, by the way. People think that I just need to raise money.
No.
What to do with that money is as dangerous as not having money.
Agreed. Sometimes it's better to not have the money so you can figure your shit out.
How to get it done. Yeah. Which is sometimes where we meet with entrepreneurs, and it's a classic thing, which is okay. They'll do the spiel, you do the presentation, it's all good, it's wonderful. I'm raising 1.5 million.
Mm-hmm.
And the question is, that's great. And we may be actually able to give you the million. What are you going to do with it? And then you get your ChatGPT schedule that comes and says, this is how I'm going to use my money. But if you don't know how to really use your money, you're doing a disservice to you and your organization for asking that much money, because you're going to have a bigger problem than you think, right? So, which is another reason, honestly, which we believe as a team, that we don't want to raise a fund bigger than X, whatever the X is that we decided, which is said in that price, in that range, is because we don't know how to properly deploy that money and stick to the strategy, to the vision, to the plan, right? So it is not that sexy. Oh my, I'm a 30 million fund. Okay, great, fine. How does that fit with what you do, how you do it, where you do it?
Right.
Same thing with raising money. So that you don't know until you really get your teeth kicked in a couple of times as far as spending money or not spending money. So do we need more of that?
Can you talk about some of your successes so far? Which have you invested in? Which businesses have you invested in? And as you mentioned before, you target startups that are Cypriot born, let's say, but target a bigger audience like the US market. Can you give us some examples of some success stories?
Yeah, and success is defined in many, many different ways, right? So in the VC space, success is an exit, ultimate success. We're too young for that. The fund was established in 2022, I think officially, if I'm not mistaken, 2022. So we're about 3 years in, which is usually the investment period is about 4. And then you've got your period of exiting to return in success in terms of exit. I think the success has come in many different ways in what we do. I think I won't even call it success. I think the journeys are basically when you get into a company and you help create what is a valuable asset. What does that mean? You got customers, right? So a success milestone for us is when you invest in a company and that company alongside with you create an organization that someone buys what you created. What a success milestone, right? So we've got a bunch of those. The other success for us, because of our strategy, was, we want them to be in bigger markets. One of our companies, 3Dium, that you may or may not know, you've heard, is an example. And others too. I'm just going to use 3Dium because it just happened to move a little faster. 60% of the revenue comes from the US. They raised a Series A, with an international list of VCs, including the United States.
Nice.
Is that a success? To us, it is.
For sure.
To them, it should be, and it is, because they've reached yet another big milestone. MBO, Promed, all these guys, they have customers. Ascanio, they've got customers. They've got things that someone sees across the table and say, I want to buy that.
Right.
Okay, that's a success story. So from that perspective, we pretty much have all of them having success stories.
And, I agree with that because and let's talk about failures here again. I'm going to go back to that. In all of my failures, none of them I didn't even generate a single euro.
Yeah. Well, yeah.
And for me,
I got a couple of those.
That for me was the most important milestone, because all I needed was a verification that what I'm doing over here is actually required. And if there was, even if the revenue that I was generating was not paying off the expenses in the initial stage, for me that was enough proof to say that yes, this is something that is needed.
Yeah, right. But and timing is everything. One of my not successes was with my partners in the US, nothing to do with Kinisis Ventures, that 10 years ago, maybe that is, we said we're going to score YouTube videos because they watch these videos and they see likes and dislikes or whatever, but no one really knows how successful was it. That's a great idea, isn't it?
Right.
I mean, check.
Good idea.
Great idea.
Yeah.
No one bought it.
Yep.
Because it was just too early.
Right.
When we put all these resources and time in and pain and whatever, and then we sat there like sad little puppies that said, wow, we just screwed that one up. And we did. And he failed. It was a failure.
Right.
Why? It's a whole different ballgame. But we failed. No one bought it. It was a great idea, though.
Yeah. But lessons learned, right?
Lessons learned, but we learned a lot. We did not listen to the customer, the potential customer.
Yes.
So all these little things that you've learned, and a few others that, obviously, but, as long as you have more successes than failures, that's life.
Then you net positive, and
as long as you net positive, you're good, man. That's how I look at it. At least, man. At the end of the day, I built a company and sold it myself with my partners. So whatever failures I did, hey, it helped.
It was part of the success.
It was part of the success, as far as I'm concerned. If you call that success, but yes, we have a few.
So just coincidentally today, I opened up before you came. I opened up my email and I get some of these newsletters. This is a big one. I don't know if you heard about this. In March now, Google acquired a company called Wiz.
Mm-hmm.
Did you see that?
I saw it.
How?
I just saw the headline. Actually, one of our guys, Alex, was chasing me the idea we had an event at the office, and he said, you got to see this. And in the middle of the event, and you got to see this.
What a massive success story.
Yeah.
Startups.
How many billion? It was a 5-year-old company.
Started in 2020.
Yeah. 5-year-old company.
Didn't exist.
How many billions?
Cybersecurity, 33 billion.
Yep.
33 billion.
Gotta love them.
God.
Yeah. But, the other thing that and I know we learned, it's all about timing. Timing is such a huge, I mean, yes, team, idea, execution, capital. I put timing in the top of that list.
Do you think that there is a strategy around getting timing right?
Yes, I do think there's a strategy.
Can you share?
Yes. The strategy in my mind is that you need to be as networked and relentless in creating a network that you ping every possible time so you could hit the time. Because what I always say, and I taught as a young professor, because I just loved it for a while in colleges until the schedule got crazy. And I would tell the students, every day you need to network. LinkedIn is very big in the States. I don't know. Here it's not as big. Here's more Facebook, I think.
No, it's big here.
I find it that some people that I want to go meet, and I look for LinkedIn and I can't find their LinkedIn. It throws me off. But anyway, and I would tell them after every class, when you go back to your room, dorm room, home, you need to LinkedIn 10 people. And every month, you need to communicate with 10 of those people that you LinkedIn. Because you don't know the time that you're going to need that network to kick in. So it's not a perfect solution. But my thought is that you will increase your probability of hitting the right time if you constantly ping in your network.
Right.
Because at the end of the day, isn't it that somebody somewhere happened to be the person that you should be doing this with?
Yes. And so I'll bring a different perspective on that, and I'll bring the term lucky. I'll bring the term luck, right?
Huge part of that. Yeah. Sorry, timing, luck. Yes, you're right. Yes.
And so when somebody looks at, let's take this whiz, for example, right? You say, these guys started during COVID, right place, right time. They built the right thing, whatever. They got lucky. The timing was right. They got super lucky.
100% right, yes.
But I think that, lucky comes in, what is the equation of, the formula of lucky? It's just hard work. And then when the opportunity strikes, because that hard work was put in, then you seem lucky, right? So you might not have this perfect strategy. What I'm going to do today is I'm going to do a startup, right? Because I know that in 4 years, this and this is going to happen. You just keep trying. You just keep trying, working hard, whatever, building your network, trying your ideas, speaking to people, try. And then you just keep working, improving your personal skills, reading, learning, speaking to people, being curious and just have fun along the way. And then one day, at the right place, at the right time, they come and they tell you, hey, and then because of that, all that backing, that foundation that you've built, it's that spark strikes, and then boom, and then you seem lucky. But nobody looks at what
the work that you create. Yes. Yeah, see, I agree with you. But at the end of the day, think about it. If I'm sitting behind my desk 24/7, being very smart, creating the best cybersecurity system you've ever seen, infrastructure. If I don't go ping my network, be out there, do whatever, that luck is going to go right by me, right?
Of course.
So it's luck. There's a huge correlation between being lucky and being at the right place at the right time. That luck contributes, in my opinion.
You could have the best product on earth.
We've seen that,
ever. Hands down, second to none.
Yeah.
And nobody knows about it.
Nobody knows.
And then that one that was kind of mediocre, that went out there and let people know about it and won.
Yep.
That one's more successful.
That's a huge success. And that's one thing that I have to say about the United States, which has been my place of growing up, not only as a young teenager, but as a professional. there's something that Europe, I don't think we do have. And I had a debate about this, and I don't care that, part of me, I'm European, I guess. So I'm going to say it, and I don't care. You're never going to find, not in my lifetime anyway, the way a U.S. business person operates a company, which is instinct and all the other things that come along. And the fear of failure has a lot to do with this, and the fear of actually the lack of fear, and the ability just to take a chance without researching it to death, or without having to inspect it to death and regulate it to death, and just choke the heck out of it.
Yes.
So that ability to be able to move and execute quickly is something that I believe in at least my lifetime, as far as being a person that invests and does. That's why I will always go towards the United States. And I don't care what others people say, as far as, we have very smart people in Europe, never going to do what the US kind of offer you.
What's your opinion about Trump and the new administration, and how do you think the view, the horizon for the US looks?
That's a spot that I'm not going. But listen, I choose not to ever, whether it's the President Trump or whether it's Biden or whatever, whoever it was. I choose not to allow it, at least in the business sense, stand in the way. Okay, it just, because that would be an excuse for kind of excusing my failure. I don't want to do that. But what is important, whoever is in charge, is to make sure that you have a view of what the kind of governing may cause delays, opportunities, and kind of bake it into your decision making. But things move and change, and I would never allow any of that to enter the commercial side of our business or what we do, because what we do is sustainable. It's got life beyond the 4 years of a president, whoever that president is. You know what I mean?
Mm-hmm.
So I don't have a view really, and I choose not to, even though I have in the back of my mind of things. But I take no.
I think that is a good perspective, in my opinion, and this is and I'll describe it in a kind of different way that I've seen rinse repeat from many successful people that I've looked at, and that is, you need to take control and ownership of everything that is happening to you in your life.
Yeah.
If you're going to sit and blame, it's the government's fault that I didn't do. Yeah. Oh no, it's I don't, I'm not, whatever. Well, fix it. Figure it out. If this administration for you is going to create a different level playing field, it's going to change your environment, understand what the changes are, and pivot and work around
Find the opportunity.
Take control of it, because it shouldn't really be dependent on if it's Trump or whoever it is that defines your success or not.
That's exactly right. That's well said. And again, presidents come and go.
Yeah.
Businesses need to stay, whether they're my investment or an exit or whatever it is. Yeah. And the other thing is that I got to tell you that for a fact, and not because I live in the United States or because I spend most of my life there. There is a very, very interesting times now for Cyprus specifically in the United States. An opportunity that comes and goes, and I'm hoping that on the commercial side of things, so I only focus on commercial things in business, that we realize the windows and the doors that are opening now in the United States with the work of a lot of people. Some in Cyprus and a lot, the U.S. embassy here and the ambassador and her team, they're just creating a very, very nice infrastructure for Cypriot business to take advantage. I see it. and I feel it. And there's things happening in the commercial side that if more people pay attention to it, we may actually finally take advantage of it in business.
Can you expand on that? So, like, give us
Yes, there's
some examples.
spotlights. I mean, there's spotlights on a relationship, on a commercial relationship between the U.S. and Cyprus that is not about regulations and regulatory. There's events that are going on. There's opportunities to create partnerships and bring businesses here and take businesses over there. And that can benefit not only the individual companies, that can benefit the island. On a commercial. I met the other day a gentleman that opened a factory in Larnaca that actually repairs jet engines for GE. I think they're GE related. I don't want to say something that is wrong. And I didn't know, but the team in the embassy told me. But why don't we know about that? It's a huge accomplishment of a company that is collaborating with a very large, company in the United States in areas that we were never before. So there's opportunities, there's events going on. There's something going on in I believe it is in late April and May in Maryland. That is, I think it's called USA. I don't want to say the wrong thing, but it's an opportunity for Cypriot companies to visit and be a part of a very big event that brings investors together, that brings commercial partners together. So all those things are there and available,
right?
And we should be taking advantage of all of that,
of course,
in bigger markets.
And I think a big a strategy, an important strategy on how we get that right is in formats like this, educating almost how it benefits America, the US, to come into Cyprus and do business here. Because, of course, it's going to benefit the island, and that's all good and well. But I think if you focus on what is in it for the US, how can Cyprus help the US? Although we're a small island or whatever, there is talent over here. And I think just getting into that market requires that incentive from their side.
Yeah. Listen, I'm just a business person from that perspective. And my business is what we described before.
Right.
And that's what I understand. I'm not at all on the political side of things, or I know what's best for Cyprus because I haven't really been here as for long. All I can say is that I feel that there's opportunities, but I hope that we learn how to evaluate opportunities and how to custom approach markets like the United States. Because approaching the United States as a market, first of all, the United States is not one market. It's 50 different markets.
You mean every state?
Every state could be a market. Every coalition, every combination of states can be markets. So when we say, well, how is the U.S.? I don't know. Which part? That's the first thing they say. I want to go to the U.S. Well, where? How? Let's get that right. And the other thing is that I believe I'm right, but I can be proven wrong, that we think that the approach to a U.S. is another cookie cutter approach that we've done, let's say, somewhere else in Europe or somewhere in the Middle East. Well, it's not. And it goes back to your point. Well, have we really, really understood and studied what does the U.S. market or markets want? And how do we package it that is attractive to them? And guess what? It may not be real estate.
Yes. Could be something else.
It may not be a hotel or, a beach.
Yes.
But why are we going back to that all the time? And I believe technology and innovation could be very interesting because we are positioned in a place that we draw technology not only from our very smart Cypriots, we draw technology and innovation and research from neighboring countries that are very smart, very good at what they do, and they're here or they're coming here. So have we really studied and understood? No, I'm willing to say no. Somebody should prove me wrong. Probably somebody will email you and say he's wrong, but I don't see it.
Yeah, I think we do that. We default into what is readily. We've got the sun,
Comfort.
we've got beautiful beaches. Come here, and I think even there we could improve ourselves a bit because, like golf, for example, we could just put a lot of golf courses. Create many more golf courses. That could be something that could bring some valuable individuals.
Yeah, you know what? Yes, I haven't looked into it, but yes, you're right. I just think that the overall theme is that there's a lot of people that have done a lot of good work in preparing the island to take advantage of a commercial activity with one of the largest coalition of markets. And again, I'm going back to the team at the U.S. Embassy here in Nicosia. They're doing amazing work, and there's so much that it's there. And again, starting from the ambassador, Julie Davis, all the way down to the team. What are we doing to take advantage of it? Okay, and the other thing is, it's not all what it used to be. To your point, is not a cookie-cutter solution from every other market. And have we truly looked at innovation and technology and evaluated? Maybe it is the foundation. I think it is because it's my sector.
Right.
Just a thought,
and we need just some more success stories. And just as I think about it, we do have some efforts in different things. So the Netflix a documentary, the movie. What is it called? That romantic.
Yeah.
It's just South African.
Yeah, what's his name? Was Harry Connick Jr. You're talking about the movie?
The movie, yes.
Yeah, that was just recently. That was it was Harry Connick Jr.
Hit the top 5 or whatever it was.
Yes, it was
what a beautiful
so cool.
success. And also Nicolas Cage came. Yeah. He shot a movie over here. I think your co-founder Janos was involved there. He met him.
Yeah.
These are great things, They pick that up more. Technology,
sure. I'm telling you, we have so many smart people with smart scientists, smart ideas. We need to package all these things better. We're not good at packaging, unfortunately. We got little success stories. We don't package them right. And
why do you think that is? Do you think we need more confidence as a nation?
Again, I think, honestly, we're short-sighted as a culture. We don't value long-term strategy and vision the way it should be valued. And I don't think we teach it at the early stage. Credit to us, or whatever you want to call it. We as a nation, as a company, as culture, we always were on the defense. We always try to survive this war, that thing. Survival brings, it's very tactical. It's very transactional. We need thinking, long-term thinking. We need consistency in thinking and not, ambirazi.
Yeah.
That's a big thing. This ambirazi thing is just a thing that fries my bacon. No pirazi. Or, let's think beyond your 3 or 4 years in office. Whoever that is. I'm not talking about, politics only. I'm talking about organizations. We've got so many organizations trying to do everything. We've got 8 centers of excellence. Are we that excellent? Are we diluting the question? I'm putting a question out there. Are we diluting our talent with all these excellence centers? Are we diluting, instead of having less and better and deeper, are we just spreading everyone too thin? Maybe somebody should think of that before we open the 9th one. Are we using the organizations that we have the right way? Invest Cyprus, the chamber, which is the top organization. It is, right? The American chamber, this chamber, that chamber. Are we working in unison, collaborating, so we can maximize the return? I put it as a question. I'm not judging. I'm just putting it as a question. My answer is no, we're not. But maybe I'm wrong.
I think it's important to put these questions out there, because if the answer to those questions maybe changes our strategy a little bit for the overall benefit.
Maybe.
Then if you don't ask the question, then nothing will be done about what we could potentially improve on.
I agree. And it's a question / challenge.
Yes.
To be honest. And then education. Are we teaching at the age that we should be teaching strategy and vision and creativity and thinking? Because all that is entrepreneurialism 101. But let me also suggest the same thing that I used to say at our class. I taught it's entrepreneurial class. Not everyone will be an entrepreneur, but to succeed in a big company, you need to think like an entrepreneur nowadays.
Yeah.
Doesn't matter where you are.
Yes.
Even I dare say in the government, which was a joke. Really, I don't think that that's the case. But everywhere you work, you need to think as an entrepreneur, with creativity and agility and flexibility and vision and strategy to succeed and survive.
Agreed.
So you may not be the best entrepreneur, but you need to be trained as such, I believe, in the future to be a successful business person, regardless. Are we doing that? What are we doing for that? So those are the things that one takes for granted that contribute to us actually being a hub for innovation and technology, and not just say we are a hub for innovation and technology. Now I have seen progress, and every time I come, I do see progress. So I don't want to beat up on it, but we're not
remotely close to compete.
To sitting comfortable with our feet up on the desk. We have way to go. And if we don't keep moving, everything that was pulled together, it will go back to zero again, because things are moving so fast. So I don't think we have the right people at the right places doing the right things.
Right. And the sitting the feet up on the desk concept, I think the minute someone does that, that's when you start. That's
the decline.
That's where it starts to go down.
And unfortunately, we've got a lot of people with feet up on the desk, and you got others that are just the workhorses, but you can't have one part of the engine work.
100%.
All the pistons have to be firing at the same time, otherwise we're not going anywhere.
Andreas, thank you very much for your time. Is there anything you want to tap into a little bit more about a topic here?
I think we had a lot of fun.
We've been here for over an hour.
It was. Thank you.
Good conversation.
Great conversation. I love it, and we can spend hours and hours dissecting some of this stuff. It's fun and it's exciting, and it's for as much as we don't do. There's a lot of things that we do, I wish that we just did it better, faster.
Yep.
So we can give a lot of these people an opportunity to truly see their dreams come true. We got a lot of good stuff.
I wish you all the success with Kinisis Ventures, and I want you to create your whiz story, that 33 billion sales.
I'm going to work on it. I can't promise, man, but I'm going to do my best.
That would be amazing.
Thank you very much.
Thank you.
Thank you for having me.